talk about volatility. How about the stock market, right? Let's talk a little bit about the stock market. Since the Fed stopped raising rates in 2022, okay, we're just got into 2025. The stock market, well, the index is S&P 500, the top benchmark, let's say, is up over 50%, 50, 50. You're going to say, well, that can't be repeated, and that's going to never happen again. Well, yeah, no, never is not a good word to use when it comes to the market. But stellar 2 years. If you just dollar cost averaged last 3, 4, 5 years, I mean, well, your account has got to be happy. Your bank account is going to look great. Your brokerage account is going to look great. Just DCAing into an index, okay? And you don't need to beat the benchmark. The benchmark, nobody can actually, not nobody, but a very few, maybe 95% of asset managers cannot beat the benchmarks, okay? I'm going to talk about that during my last segment when I'm showing my accounts. If I did beat the benchmarks, what do you guys think? Did I beat the S&P of 25% this year? You guys think I did? Put it in. Actually, let's do this. For however many of you are here, put it in the chat. Put my final percentage return for 2025 for my trading account. My long-term investing account did ridiculously well this year, okay? Actually, it did better than my trading account. But then I had a couple, 3 gems in there that I was lucky enough to find, figure out, and hold on. I held a couple of them for a year and 5 months, so to get into long-term capital gains situation. But the market is, for the novice investor, long-term investor, has done wonderful, right? 10, 11% a year. But last 2 years, that got turbocharged. We're 25, 26, 7% last year, 23, 25% this year. Well, yeah, I'm glad you're putting the percentages in there. You guys will see what my percentage was. And then I compared it to the indexes, actually, so you guys will see it. But the markets, to me, the important thing about the markets is, you can't keep doing 23, 25% every single year. You just can't. There's law of averages. So S&P finished the year about 24%, 2024, and it was 24.2% gain recorded in 2023. Okay, we're almost 50% for 2 years. So this happened one other time before. Okay, in 1997 and 1998, the annual return was 31% and 27%. See, it does happen. So these boxes I put around the bars are those 2 years consecutive over 20% returns. It has not happened for too many times. And then the down bars, the gold bars, are down years. Okay, so most of you may say, well, it's not 50%, it's not going to go up again. I'm like, well, I'll give you guys my prediction on the next segment, I think, about where I think the market's going to be, just like I made probably a fool out of myself and gave you the prediction for Bitcoin. Subsequently, the index, after the 97, 98, 31, and 27%, climbed 20 more percent the next year before the 2000 dot-com bubble, and then we know what happened then. So our stocks set for another strong year. Well, on the next segment, my prediction is going to tell you guys if I think the stock market is going to do well this year. And we'll hold that for I'll do one more segment after this, and then after that, my prediction, and then my year-end results. I'm going to show you guys those, my expectations. So yeah, I'm telling you, people, just dollar cost average in an index is just going to be okay. Just put $100 a month, $100 a week, whatever you can put in there, just DCA. Look, you can be a trader, you can have a trading account, you can do well. Most traders don't do well. The advertisers, they're doing well. I have nothing to hide, full transparency. I put my losses, I put my gains on the YouTube channel. I mean, I'm not doing it for YouTube dollars, but my goal is just inform, educate, and pay it forward.